Good morning everyone, and welcome to the PivotBoss pre-market video for Thursday, December 20th, 2018. I am Frank Ochoa, aka PivotBoss. Real quickly, I did want to mention that this will be my last pre-market video here for at least the next week. I may offer a video intermittently depending on what the market does, but we'll be taking a break here for the holidays with the family. But taking a look at the ES here, we're going to take a look at several various markets here that we don't usually look at, including the dollar, the bonds, etc., to give a broader picture of what we may see here going forward. But one thing I want to mention is, number one, we have finally hit new lows, significant new lows below the key range. This is the key range we talked about from the beginning of the year. The harsh sell-off from the end of January to the beginning of February. It was such a large move. I mentioned at that time that price was likely to stay within this range throughout the year. And as soon as price breaks the lower edge down here, that would offer the best opportunity to buy in much cheaper for a shot at returning price back toward 2,700 and perhaps all the way back toward 28.78 half. Now again, we have to see signs of rejection down here, but so far you can see that after pushing down into the zone after yesterday's FOMC, we have dropped into the LVN. We hit a low at 24.76 quarter, and we're now popping back up above 2,500 at the moment. Now again, this doesn't suggest that we are ready to rally right away, although anything can happen at any time. As soon as price reclaims 25.29 and can stay above that zone, that's when you start to mark back toward 2,700. And that's going to be a high probability target that could be reached rather soon. We do also have an impulse sell-off from this high down to this low. I thought we had one here. It nearly got back toward the midpoint we were looking for and failed. Now we have this strong low here, or at least a low that's trying to develop down here. From that high to this low, you would have a midpoint at 26.4513. If this low remains intact, that still remains in question. But overall, this is a major range that has continued to play out. And anytime you test prices below the key range low, even into the 25% target down here, the 24.41s, anything in here we could develop for a while and then start to pop back up. That would also be helpful. So right now we are in the zone where if the market was going to see some sort of buying pressure, you would want to see it, at least something, happen down here, because if we start to push much farther through this zone here, you start to reach some major levels down below. The midpoint from the recent rally takes us to 23.7475, and that is from the recent 2016 lows to the 2018 highs. That's the midpoint. So if we take a look back this way and bring it up here, this is something we've been looking at in the room here, in the trading room, but this low right there, which is basically 1800, to the high that we have here to this year, to come back 50% would be this level right here. That's 23.7475. So that would be a 50% pullback. We're almost there. And again, if we were to push somewhere into the 23s, I think it's a spot that we could see some significant bounce. We're not too far off those levels, right? We basically are 100 handles from that current low today to those recent lows. And remember, the ES is averaging 68 points per day of range, which means we could see that level in the next 2 days easily if this thing wanted to, based on average range that we've seen over the last couple of weeks. So we're not too far away from it if it really wanted to hit it. But right now, being below 25.29 is very important. And again, if it starts to reclaim prices above 25.29, that could spark a move back toward 2,700, and it could be rather quick. So again, we are in the sweet spot right now for bulls who would look to defend at these levels. And if that defense does not come, again, we could see much more weakness here toward that 23.7475 level. If we take a look now at the NQ, you'll see here the NQ not quite at the lows of the year. The key range low is this level right there. That's a level that's not easy to see on the screen right now. Let's zoom into it a little bit here. but that level is 62 and change, and that's a level again that needs to be tested in all likelihood before this thing can go higher. But that's not even the low of the year. The low of the year comes a bit lower right here, which is in the 61s, and that again is right inside a major LVN between 6K and 6200. Again, I've mentioned that this is likely the best area to find value in this market for a spot, or a shot rather, at rallying this thing back toward the midpoint of the key range and perhaps back towards 7200. That could be a really solid move back to that zone, but again, we need to likely wipe out a little bit more before we see any type of significant buying pressure. So again, while we are seeing a little bit of a bounce here off the recent lows today and overnight, perhaps there is a little bit more that needs to be seen to the downside before you see that emphatic buying that we at least anticipate could occur. Because if buying does not occur through that LVN or into that LVN, again, we have much more downside that could be seen, especially given the ominous head and shoulder pattern that's developing. So again, that's the major area there. Do we need to test it? Perhaps so. And if so, do we see some sort of significant buying pressure? And when I say significant buying pressure, it's something like we've seen earlier this year. It's something like this. You need a major day, a huge high range day, a significant rejection from lows, and a return from those lows that likely won't be retested. That's the type of move you need. And right now we are in a series of lower highs and lower lows, and while we could see a counter trend move here, again, we need something much more significant, perhaps a little bit lower. So that's what we're looking for here in the NQ. If you take a look at crude oil right now, you'll notice crude oil is down again another 3.5% here today. We talked about this one still being on a downward path. This is about as bearish as I've seen it in years. It can't string together 2 up days in a row. And this really isn't an up day, right? This is sideways range stuff. It really hasn't been able to push and put together 2 up days in a row. It's all down, and hold sideways before it drops again. And if we look at this from a higher time frame perspective and roll this thing back some, again, we have a major LVN that comes into play between 38 and 40. That's that level there. And then 42 is a razor sharp level there. 42's right here, 42's right here. Those were the last 2 major levels. 42 before it rallied to 77 and crashed. So 42 likely needs to be hit and perhaps taken out into 40 before we see some sort of strength back up. And so again, this is the key range we're looking at right here. It's this trading range from 40 to 55. That's the new normal that we're likely going to see here. And in breaking back below 55s, that's why 55s were so important to me. Breaking back below that area suggested we likely drop all the way back to 40, and then we bounce back up to 55, back to 40, 55, and trade in the range just like we did back here for nearly 2 years. So that could be what we see. This is the distribution right there with value at around 49 and change, 48.94 now. That is value. This is the other side of value. This is the underside right there. And usually you trade down through it, back up, back to it, and then you trade around that level for some time. So again, I believe that we're likely headed back toward 40. 42 would be the top end of that support level, but 38 to 40. And again, until we see some sort of significant buying pressure, this thing is likely going to continue heading lower. So every pullback is likely a selling opportunity, and the PIMA trigger zone provides that opportunity. If we take a look at the dollar index right here, it's the US dollar, finally seen a little bit of pullback, which is easing up a little bit for the broader market, the equities. Anytime you see this type of pullback here, it provides an opportunity for equities to rise. We are at a cycle low. Additionally, this is the FOMC key level from November. This is the one here that we had yesterday from December. And the one from November here had been support. It was bid on the day it happened. When it got below it, it was bid back up, defended again, defended again, defended again, and now retested, and prices below it being defended again. This is the level that needs to be taken out in order for price to drop back down. And if not, then again we could see another pop back up toward these highs. And again, that could likely lead to a bit of a pullback in equities into those lower key levels. Now if we look at this from a longer term perspective here and bring this back a little bit, you'll notice there's a couple of things here. Number one, that's a major high right there, that pivot high right here. And price has been sitting at the upper edge here, chopping above and below that pivot. And it appears that this is getting a little bit heavy at these highs. And when it's heavy, there's a tendency for any longs up here to start jumping ship. And that provides a pullback opportunity back toward recent support lows. That could take you between 93.60 and 94. And again, that would likely open up some upside for the equities. So this is something to watch here. Again, if we fail to hold, say the 96s, it opens up some downside into the 93.60 to 94 zone, in which case perhaps we bounce back up and stay inside this range. So this is going to be something to watch here. Again, it's been holding this FOMC key level at 96.376. Any failure to hold that level suggests we could rotate all the way back down to recent support. And again, that could be a nice bullish indication for equities. Now if we take a look at ZB, you'll see here one thing we talked about before was that this trading range was very, very important over here. This key range that it played out here. So we had the key range low, key range high, and the midpoint. And each time we were up here, we mentioned that we could pull back. Once we broke and failed to hold here, I mentioned that that pivot right there was going to be very important. It was the 140 level. I said as soon as price can get above the 140, high odds we hit 143 with a shot to hit 145.27. We hit that today, and that was a significant push across that range. Again, according to the market structure that I follow, typically speaking, once you get the move across the range, there's a tendency to come back down toward the midpoint of that range, and perhaps even all the way back to 140 before it trades back inside this range. So this was a significant squeeze that we've seen here lately, a solid continuation, especially over the last few days. We have now hit the 145.27s, and if you look at history all the way back to February here, every time we've gotten above that zone, it was an opportunity for the bonds to drop back down by some degree. So again, if we cannot see acceptance above 146s here pretty soon, perhaps we rotate back to 143 and maybe even all the way back to 140 before we trade back inside this range between 140 and 146. So right now we're hitting the opposite edge. A significant move after popping back above the 140s as we mentioned before, and now we have to see, is price going to push a little higher, or do we see some sort of pullback to begin the new year? We're getting very close to the end of the year here with this high and that close right now being very close to each other. Obviously we still have quite a bit more before we finish that out, but in most cases when you see that, if this were the end of the month, in most cases you would rotate back to this midpoint right here, which is currently 142.22. So again, we could be looking at a pullback here in this manner back toward 143 to 142, and that would be a high probability, high odds move, followed by the potential to even see a move back toward 140, and again, that may lead to some bullish type of behavior in the broader market as well. Alright, that is it for now. We will see how it plays out heading into the new year. This will be my last pre-market video until perhaps late next week, perhaps the 28th or maybe the 31st, but I will provide videos here intermittently in case the market does something significant. Have a fantastic holidays. Wishing you and your family the very best. Good luck and trade well. I'll see you soon.